Now, I'm going to be honest, it has been a pretty rubbish few months for the stock market. I've lost almost £6,000 in the past 3 months, so naturally, now is the time when I'm going to do my first portfolio update. Because whilst it might be less fun for me to talk about my portfolio when things are down, it's arguably the most important time to actually go through it. Social media has a habit of being full of people only celebrating their wins. So today, you can mourn my losses with me. And if you want to mourn more losses in the future, be sure to subscribe to this channel. I'll aim to do these portfolio updates once every 3 months, and I'll go over how my portfolio has performed, the biggest winners and losers, any new stocks I added, any investments I sold completely, and finally, I'll go through the biggest investments I made in the past 3 months. So let's get into it. So let's start with how my portfolio has performed over the first 3 months of 2025. And it's not been fun, with my portfolio down by 8%, losing me over £5,500. By the way, you can probably see that line that goes straight down in the middle of the month. That wasn't a one-off disaster. That was just me transferring, I think it was 10 or 11k to another stocks and shares ISA. Because that's an investment that I'm setting aside for myself and Andrea, and I wanted to keep it separate from my own stocks and shares ISA. But that shouldn't impact my overall return. So minus 8% isn't very good. But I'll add a bit of context. The global stock market has fallen by just over 3% in the past month. To be honest, this is what I measure myself against, because if I didn't invest in individual stocks, all of my money would go into this global index fund. Now, I've performed pretty well against this fund over the last couple of years, but there is a pattern. When stocks are going up, my portfolio tends to go up by more than this fund. And when stocks are falling, my portfolio tends to fall by more than this fund. Now, a lot of my individual stocks are US companies. So I also compare my returns to an S&P 500 fund, this one, which is denominated in British pounds so that I can compare apples to apples versus my portfolio and don't have to worry about exchange rate fluctuations. The S&P 500 has fallen by over 7%, which is pretty close to the return of my portfolio, and the tech-focused Nasdaq 100 has had a similar performance. So given everything, I'm not too disappointed about my portfolio being down by 8% because my choice to invest most of my money into stocks of fast-growing businesses means my portfolio can be more of a roller coaster. And that's something I'm happy to deal with if it gives me the opportunity for potentially higher returns in the future. So a bad quarter, but not all that terrible when compared to the broader market. So what are the stocks that have been pushing my portfolio lower and the ones that have been trying their best to keep it afloat? Well, 2 of my 3 best performing stocks were ones that actually hadn't been going so well for me on the whole. Progeny, a fertility benefits company in the United States, whose shares rose by over 50% this quarter, and energy drinks company Celsius, whose shares rose by almost 28%. Unfortunately, these are both pretty small holdings in my portfolio. Combined, they only account for 3% of the total value of my stocks and shares ISA, and they are, on the whole, losing investments. But they are both smaller companies, and these can be prone to more dramatic swings. Plus, honestly, neither business has been doing great over the past 12 months, but I'm not writing them off, and it's a good thing too, since they've helped my portfolio a bit this quarter. The most substantial winner was Mercado Libre, the Amazon and PayPal of Latin America, delivering returns of just over 20% in the quarter. Now, as you can see, my Mercado Libre investment is worth just over £4,500. It has grown by almost 70% and makes up about 7% of my portfolio. In fact, Mercado Libre tends to be a mainstay in my top 5 largest investments. It's a very strong business that I've invested in for years, and it reported some very strong results in February. And Mercado Libre was probably the biggest lifeboat that my portfolio was able to cling on to. But now, let's go into the less fun stuff, the biggest losers. And the biggest loser, by far, was the trade desk, with shares being more than cut in half this quarter, following some really disappointing results in February. And again, I spoke about this in detail in my March investments video, but I will touch on the trade desk again a little bit later on in this video too. The other 2 worst performers were some smaller investments undoing the good work of Progeny and Celsius. These were small ad tech company Pubmatic, with shares falling by almost 35%, and meal kit delivery company HelloFresh, whose shares also fell by more than 30%. Again, both pretty small holdings in my portfolio and both fairly small companies. It's never fun to see this, but there's not enough for me to lose patience with these businesses yet. Now, when we've had a quarter like this, with lots of ups and downs and potential opportunities, it's nice to have an investing platform where I can easily track and tweak my investments without having to worry about paying commission every time I buy and sell stocks. And that's why I've used Trading 212 for my stocks and shares ISA for the past 5 years. If you want to start investing with Trading 212, you can use our promo code SNSBonus to get a free fractional share worth up to £100 when you join Trading 212. This is an affiliate code, meaning that we get a small payment when you sign up, which helps support our free content. Anyway, let's get on to the fun stuff. I'll go through any new additions to my portfolio, anything I sold completely, and then I'll finish off by talking about the stocks that I invested the most money in this quarter. So we'll start with the new additions. Often, I won't actually add any brand new stocks to my portfolio in a given quarter. I think it was Peter Lynch who said that the best stock to buy is the one you already own. Meaning each month, I don't go searching for new stocks to invest in. If I think the existing companies in my portfolio are some of the best businesses around, then I have no need to go looking elsewhere. But sometimes, new opportunities do come up. And there was one brand new stock that I added to my portfolio this quarter, Croda International, a UK-based specialty chemicals company. I've already spoken in detail about this investment back in my March investments video, although I think I made my first Croda investment at the start of February, in part because I thought it looked like a really attractive and different kind of investment for my portfolio. But it was also because a lot of my existing investments were looking a tad expensive, although the market has since fixed that, so cheers, thank you market. Anyway, here's the 30-second investment case. Croda has been a solid company and investment for decades, operating in a wide range of niche industries where its ingredients are crucial to its customers' products. It saw a boom during the pandemic and a bust that followed, and to be honest, now I think that shares seem far too cheap for this strong business that should keep chugging along over the coming years. There are also a couple of investments that I sold completely this quarter, which again, I don't do that often. The first of those investments was one that's been a headache for a while, and I finally decided to pull the plug on Tesla in this quarter, selling my investment in the business for a profit of over 100%, which, to be honest, I'm very pleasantly surprised with. I did this in part because I thought shares were looking quite expensive. They were valued at about $385 when I sold my investment, and they've fallen quite sharply since. I can't pretend that I could have predicted that, and to be honest, overall, I tend to be quite happy to hold on to companies even when shares look expensive. So the expensive share price was simply a bonus for me. Truth is, I did want to sell my shares of the business. And yes, it is because of Elon Musk. I don't really think I need to go into it. If you don't like what Musk has been doing for the past 12 months, you probably understand why I sold. And if you do like what he's been doing for the last 12 months, you probably think I'm an idiot, which is fair, I can take that. Ultimately, I do think that Musk's dive into quite controversial politics has been harming Tesla's brand unnecessarily. And the company is going through a tough time at the minute, and shares did look expensive. So all of this made it quite easy for me to sell my shares. Now, I could tell you how I don't let my political beliefs and personal biases impact my investment decisions, because I'm a super self-aware and rational investor. But in reality, I think if I agreed with what Musk has been doing and saying over the last year, I'd probably still be a Tesla investor. And to be honest, I can still see Tesla being a successful investment, especially now that shares are 30% lower than they were. But it's just not one for me. The other investment I sold completely was my Nasdaq 100 ETF, which I had £1,000 invested in. Honestly, this is a relatively small part of my portfolio, especially for a fund, and I think I have enough US tech covered with my global index funds as well as my individual investments. Truth is, I did want a bit more money to put in some more individual stocks this quarter, and I felt like this was enough of a like-for-like investment, so not much exciting there. Finally, let's take a look at where I put most of my money this quarter. My biggest investment by far was the trade desk, where I topped up my existing investment with almost £3,000 throughout the last 3 months, which probably doubled, if not tripled, the amount that I had invested in it previously. The rationale is simple. I've invested in the trade desk for years, and I have seen just how well the business has performed and executed over that time period. It messed up in its latest quarter, delaying the rollout of its next-gen advertising platform Kokai. But the delay was more caused by fixes they wanted to make to the user experience rather than any core issues with the platform. So in my eyes, it's a bit of short-term pain for long-term gain. And shares are certainly feeling that pain, because the market wasn't too happy. But I believe that this is short-term pain for long-term gain with the share price as well, because I don't think a business goes from being incredible to rubbish in the space of a quarter. My second largest investment was Croda International, which isn't a surprise because any new investment tends to get a bit more money put into it at the start, with Alphabet, the parent company of Google, taking the third spot, as I added £700 to my existing investment. I also added £650 to Bloomsbury Publishing this quarter, meaning it just about didn't make the top 3. And I also made smaller additions to my investments in CrowdStrike, Airbnb, Amazon, LVMH and Mercado Libre throughout the quarter. So that's a wrap on my first portfolio update. If you want more videos like this, keep an eye out for Andrea's first portfolio update that will be coming out next week. And if you'd like to follow along with our investing journeys over the coming months and years, don't forget to subscribe to this channel. Hopefully, the next portfolio update will be a bit more uplifting, but I guess only time will tell. Thanks a lot for watching, and I'll see you next time.